My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Welcome back, folks. Today our special guest zooming in from Pinehurst, North Carolina is Marshall Sykes. And Marshall's a really interesting guy. He spent many years in the Navy. That's kind of where he and his wife first got their feet wet when it comes to real estate investing and buying single family homes. Then he got out of the Navy. He was working in oil and gas. Heck, he was up here in my neck of the woods. He was in Calgary, Alberta, Canada for a while. And then most recently, he and his wife have gotten into multifamily real estate investing. So Captain Marshall Sykes, welcome to the call. Great to have you.
Dave, thanks for having me. It's a pleasure to be here today.
So Marshall, let's just kind of zoom out for a second. Tell us a little bit about what do you guys invest in when it comes to multifamily? What's kind of your buy box when it comes to the kind of properties and the locations? And just gives us a quick little overview of what does the portfolio currently look like today as of the middle of 2025?
Yeah, I mean, I've been involved in a lot of different syndications for multifamily, around 15 or so. And so there've been a lot of different locations across the U.S. I think for me personally, a lot of times I'm a co-GP, so I will invest with another partner who leads the deal. And so really my value add for my investors is finding the right partners to go into business with. Okay. And I do that not only in multifamily, but more recently I've done that with IPO companies, pre-IPO companies, as well as oil and gas syndications as well.
Okay, well, that makes sense. You've got a background in oil and gas as well, and real estate, and makes it that. And these days, sometimes multifamily is not as sexy as it used to be, or it's not as appealing as it might have been. Very, very good. So, what does the portfolio currently look like for you these days, Marshall? How many different properties are you involved in?
I'm involved in around 10 multifamily properties, and some of those are in Florida, Georgia, and Tennessee, those type of areas. I think one or two still in Texas. And so those are kind of my areas. I've also still have some single family home rentals that we have here in North Carolina. I've had a larger portfolio than that, but now we're down to about 3 or 4. Okay. So trying to kind of diversify into some other asset classes. And then I'm also involved in a couple of oil and gas deals, as well as a stone manufacturing company that
interesting.
It's kind of interesting. Yeah. So,
okay. Well, this is going to be interesting for me, Marshall, because if you don't mind me asking, I'd like to kind of compare and contrast the pros and cons of multifamily versus oil and gas versus IPOs. So maybe let's talk a little bit about oil and gas. Tell us from an investment point of view, what really appeals to you about that asset class?
I think since I worked at ExxonMobil for nearly a decade, I kind of understood oil and gas a little bit. And so investing is a little bit different though, because you're investing not in major big projects like we did. We did $1 billion projects. These are smaller, wells that are maybe have 100 wells in one field that we're investing in, but we're not actually operating. So what I like about oil and gas is my buy box for that is finding going in with an operator who we're looking for a non-operating working interest. So we're not going to operate or do the production. We're going to leave that up to a mid-major. I call mid-major, somebody like Marathon or Continental Energy or Devon Energy, who are billion-dollar companies, and they're publicly traded, so they have all the kind of the structure in place to run the property. But what I like is they already have the wells in production, so we're buying into a lease where it's already cash flowing. So the
Okay.
wells are already there. We're cash flowing. We're gonna participate in new drills, but where the new drills will be near the existing wells. So we're
Hmm.
not going out wildcatting or anything. So we know that there's oil there, and so we're gonna participate in infill drilling, is what they call it. But anyway, that's really just wells near the existing wells.
So is this, talking kind of in real estate language, and forgive my ignorance about this, but I have no experience working in oil and gas, so
That's fine. Yep.
it'll be dumb questions. So you're getting into an existing oil field that has wells, but you're investing in new wells in that existing field, right? So that's where the cash flow is going to come from. It's not coming from the existing wells, correct?
No, the existing wells are already cash flowing, and we're buying into that.
Oh, you're buying into that. Plus, they're going
But
to
the
put some
upside
new
is
wells.
is in new drills as well. So you
Okay.
can compound your upside by participating in new wells,
So that's kind of the value add to that investment is putting more
the
wells in
value
that field.
add.
Okay, cool. So time frame for these kind of investments, how long are you typically holding them for? What's the exit play, the exit strategy? How does it kind of work?
Yeah, normally you're holding for anywhere from 6 to 10 years in an oil and gas deal. So the exit strategy is
It
again
dries
you're
up.
so
The wells dry up and it's kind of done, or
well, they
what
don't
is
drop
it?
that quick. Usually they're 25 years or so, and
Okay.
then you want to, but sometimes you have to do a rework on them, rehab basically to get
Okay.
to increase the production. So we'll do that as well. But yeah, that's why you're doing new drills all the time because once you drill a well, there's always a depletion going on. So it's usually anywhere between 10 to 15% a year is being depleted. So you have to do a rework to increase that, or you have to do a new drill near that existing well to increase your production.
Okay. So it's typically kind of a midterm type hold kind of thing as far as time wise. Well, depends on what your time frame is, but uh, up to 10 years is kind of
Up
what
to
you're
10
looking for.
years. So sometimes,
Yeah.
that'll, it's just with any investment, you're going to have a projection out there and you have a kind of a evaluation of how long you think it's going to take to turn your money.
Hmm.
But think the market always changes once you sign a deal, right? So it could be faster than that, or in some cases it could be longer, but most times it won't be longer than 10 years. Yeah.
Okay, so how does one of those syndications work compared to a multifamily syndication, or is it even a syndication? Like what does it look like?
Yeah, I mean, you can probably do them without syndications, but we're looking for retail investors. And
Hmm.
so we do them through the syndication model as well. And it's very similar to the multifamily syndication model. You're still investing 50 to $100,000 per deal normally. And you're getting a wide range of investors in those deals. But you're still just like multifamily, you're going to get quarterly cash flow. You're going to get some upside appreciation on the back end. So it's very similar model as that. It's just a little different. It's a different sector, obviously, and commodity pricing is global.
Hmm.
So a lot of times, you're dealing with global markets on oil and gas. I guess comparing that to multifamily, it's more about, that market's rent increases, ability to increase rents in a market
Hmm.
is your multifamily play. And so it's kind of comparable in that realm.
How does the appreciation work? Where is the value being added to the investment? Is it through those additional wells that are being drilled?
Yeah, the appreciation is part of that's an additional wells, but also is the commodity price going to
Hmm.
be increased at some point in the future?
Oh God.
And so
Okay.
that, right, the one we're participating in right now, the the economic forecast is that the commodity price is going to go up in the future. So we're the appreciation will come from that. But we look at, the base case
Hmm.
and we also look at a downside case. So the downside case, you'll probably double your money in 8 years. And the upside case or the base case is if the commodity prices kind of remain what they are now, then it could be a 6x return, 8x return.
So, what is the downside to oil and gas compared to, let's say, multifamily?
Well, the downside, I think, is you're relying on the global market. So you got a commodity increases or pricing. And we use hedging to kind of offset the risk in that.
Hmm.
So we don't want to lose our shirt. So we're going to have a hedge at the bottom of the pricing as
And
well as
what does that even mean? How does the hedge work?
well, it protects the price. So let's say the price today is around $65 a barrel of
Hmm.
oil. It will have a hedge on it where it won't, if we will sell that price at $55 at the lowest. So maybe $10, $15 below that. You don't want to where it goes down to 30 and then you're gonna lose some value in your investment. So
Got it.
you want to have a guarantee, but it's kind of like insurance. You want to have a guarantee that it won't go below a certain price. It's the same type of hedging that's used on the stock market and
Hmm.
on different stocks.
Got it. Okay, makes sense. So, Marshall, when it comes to the real estate, you're a co-GP in those projects. Same idea when it comes to oil and gas, I would imagine.
Yeah,
You're raising capital.
you can be a co-GP. And normally in the model I've done so far
Hmm.
is I have my own single purpose vehicle or fund and
Hmm.
I participate in I I raise capital from our investor community and then we fund into a larger fund with a big operator.
Got it. So it's kind of a fund to funds
Fund
model
of
for
funds
you.
model.
Yeah.
Exactly. Hmm.
So, Marshall, things have been a little bit shaky in the whole multifamily space for the last couple of years with interest rates and you know what's going on with the market and value of properties and the whole bit. I think it's probably pretty smart that you're starting to diversify and get into oil and gas and IPOs and different things as well. How has this affected raising capital for you guys the last couple of years?
I think anyone who invested in multifamily in 22, 23 is seeing a hard market, right? Unless you unless you were in the right place at the right time.
Mhm.
For most part, a lot of multifamily operators are having hiccups in those properties that they bought back then, particularly if they had a variable interest rate loan, which a lot of operators did because it had some advantages, and that's why they did it.
Mhm.
Um, but now looking back, you think, yeah, I wish I'd had a fixed rate loan,
2020
of course.
hindsight, all that good stuff.
But
Yeah.
you pay on the back end for that too. But so I think for us, it's harder to raise capital from people who have had issues with multifamily,
Yeah.
have lost money, I guess, or have not gained cash flow as we, projected. So it's harder to do it because they don't really believe the models anymore, or they want to understand them a little bit better. So then it becomes a harder even explanation process or educational process. So, but any investment all comes down to trust. And so if you can continue to build that trust and have open communication, that makes it much easier to raise the capital as well. But I think diversifying into different sectors has helped me as well.
Mhm.
I've been able to raise capital because of that.
Is it very challenging or complicated to kind of take people from multifamily real estate into other asset classes that they don't have any experience with, like oil and gas or IPOs, like to re-educate everybody and get them kind of on board with this quote unquote new thing?
Yeah, I mean that you do have to have an educational process.
Hmm.
I try to do that with oil and gas, and you have to have a lot more communication. I have a lot more Q&A sessions, I guess, is one way I do that.
Hmm.
So I can have individual discussions with, 3 or 4 or 5 people at a time, and they can kind of feed off each other and understand from each other. So that helps a lot. The IPO
Sure.
process, I think people understand that you taking a company to IPO is a little bit more talked about in the news, and
Hmm.
so they see that. They may understand that a little bit more, but you do have some education process with that as well.
So, Marshall, what do you find is working better for you these days for connecting with new investors, kind of keeping that pipeline, so to speak, no pun intended, of new investor leads going for you in your business? Because it sounds like raising capital is the main focus that you've got.
Yeah, it's the main focus for me. I didn't never thought I was going to raise capital. I thought I'd just be operating real estate. But, once I started, all the operators need to raise capital, right? And once I started doing that, I liked the networking piece and connecting with previous colleagues. And so I really kind of enjoyed the capital raising piece on that. But I
Yeah.
think, but I forgot what your question was
What
exactly.
what what are you doing these days to kind of generate new investor leads for your business?
I think the big thing is the best investors are warm leads or
Yeah.
referrals from people who have had success in some of these deals. And but also I have a good LinkedIn presence as well that I try to provide value to people on LinkedIn in different formats with that.
Excellent. No, that's good. Well, hey, Marshall, I really appreciate you kind of unwrapping oil and gas as an investment. We didn't really dive into the IPO thing, but you're right. I mean, we've all kind of heard of that. But that's interesting. I've got a much better understanding of the appeal of that and kind of how it works, at least the way that you're doing it. So thank you very much for that. Now, I'm sure there's going to be some folks out there interested in connecting with you. What's the best way for them to do that?
Well, I definitely am on LinkedIn, and I think that's a great place to connect, and we can have a message discussion on that, and
So if
then we can
somebody's
take it
just
from
listening to
there.
this, they don't, we'll put that in the show notes, I'm sure. But if they're just listening, what's the best way for them to find you on LinkedIn?
Probably just put in Marshall Sykes, Sykes, and search that. And if you can't find me that way, which you probably will, but just add Navy to it, and I'm sure it'll
There you
pop
go.
up.
That's the whole captain thing, isn't it?
Yeah.
Awesome, Marshall. Well, hey, thanks so much for being on the show. This has been great.
Dave, thanks for having me today. It's been a pleasure.
All right, everybody, take care. We'll see you on the next one. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.